Alrighty, what is good? It is May 14th. I got a couple of requests to do a little market review and kind of go over the scalps and that 10-hour trade that I had posted in PM session and kind of just explain my thought process per usual. And there was a couple little things I wanted to note moving forward for people, especially that are watching these videos and the just trade ideas I post, and to give them a, I guess, higher probability for their entries and exits and what to look for and what not to look for, etc. So kind of getting into the morning, obviously, I will say due to the economic calendar, which I'll pull up really quick, you should be familiar with. Let me drag it right over here. You can see that we have obviously quite a bit of high impact news this week. And usually my protocol with high impact news, right, is if there is a high impact news driver, this is why I use the economic calendar, it allots me to trade pre-market when permitted, right? If we have a really good news driver, 7:30, like 7:30 CST, make that clear. Like I said, I only talk in CST times. 7:30 CST, if there's a good news driver there, I will entertain trades in pre-market, directly correlating because volatility is high. Volatility is good. It is moving like a normal AM session would due to those high impact releases, causes a lot of movement in the market, a lot of volatility to be injected. So for me, those are good quality times. So that may clear up the questions as to why some days I trade pre-market and some days I don't. So getting into that, there was a couple good setups prior to even news. And the first one being right here. You can see we have this fractal right over here, that wick, and we have an imbalance directly attached to it right there inside of this little swing right over here, right? So immediately what we see right here is a nice little sweep of these equal highs right here, this high right there, this high right there. What do? We return back into the range. So if we continue with the ideology of buy and sell stops, right, where are we getting our entry? We're getting our entry at the break of this candle, and we're going for a quick, just easy one-to-one, right? This one takes a little bit of drawdown, but what do you notice? We never refer back to that high after that sweep and close back into the range. And ultimately, this does go down to TP right here at 28375. And I believe that was just a 4.25 point winner. Obviously, this is before news release, so volatility is not as high. And this one it's a different kind of setup that I am not going to cover in some of these recaps. That will be saved for later. But that was the first setup going into or prior to news release. And this was the one that I had taken that I posted the P&L for on Twitter right here. This was pretty textbook. You can see obviously we have this news. And it's important not to frame a bias off of news because usually it is a manipulation driven event. And framing any sort of bias off of it is not really smart. Obviously, like I just stated, it's a manipulation driven event. You don't want to be attached to the manipulation. Rather, you want to see what occurred here. And ultimately right here, I do want to dive a little bit deeper into this. I don't have the 12-minute pulled up right here, but we did have a 12-minute break to the downside, right? So I was anticipating to see some form of little rejection from this 50%. That is what this white line denotes right here. That is a 50%, I believe, from this low to that high up there. And basically, with this scalp right here, what I was doing was I was trading back up into that 50% of that area, right? So what do I immediately recognize right here? Let me delete this real quick so I can redraw it. Obviously, we start to return back in. We have this big imbalance right here. We get a little push off of it. You can call it a quick scalp or whatever if you're trading with that imbalance. But ultimately, what I recognize here, right, is we have this low right here, okay? This low gets swept within this fractal right here. What do we also have? We also have, I guess you can deem this kind of like an order block, right? We have this quote unquote order block. This is going to be a lower time frame CSS. A lower time frame CSS is going to reside in here, but I still classify that as an order block because it is not a prominent swing low or swing high. So right there, we have this confluence, we have that confluence, we have this confluence, ultimately the sweep. And if you saw, I think I said it, I think I posted it in my Discord, which I'll have linked below. It is free for y'all to join. There are a lot of good people in there that chit chat back and forth going over DTFX stuff. And I answer quite a few questions in there. But getting back to this, obviously right there, right, is something I said in the Discord was sweeps are sweeps, by themselves. If there are no confluences and nothing supporting them, they're not going to be strong enough more times than not to support a certain narrative, right? Usually my protocol with sweeps is I want 3 confluences in alignment. That A being market structure. Market structure is the most important part, right? Now you may say this is counter trend, right? But I have seen these, obviously, like I said, news is a manipulation driven event. I know more times than not, this is going to be the move, the fake move, right? But the thing here is I'm playing back into the amounts, right? So we have, in my opinion, low time frame market structure. I know I'm on the right side here because ultimately I had a higher time frame draw, which I'll go over as well. But back to confluences, right? We have this fractal right here. We have this sweep. We have this OB. That's 3 confluences already. Like I said, I usually 9 times out of 10 want a minimum of 3, and we have 3 there. So this is a no hesitation execution, and ultimately targeting up towards these highs or 50% of that swing, which is what I said was denoted by that 50% or that white line right there. Sorry, I keep mixing that up. And then we have a literal exact setup right after. This was right at open, which I usually do not tell people. It is absolutely not smart to trade right at open unless you have a lot of screen time with it. I've seen multiple setups happen at open, and you've probably seen a couple of executions that I've posted on Twitter that are literally right at open, but that's directly correlating with screen time. I do not recommend this for 90% of people, but it's still a good example to show because it's almost exactly what I just talked about and the exact basically footprint, right? We have this sweep, we have these equal lows, we sweep it, we get a double sweep, we have this wick, and ultimately we get our break right there. But look where price refers back to, right? We have this fractal right here. You can see we tap it slightly. We refer back into this lower time frame zone over here, right? And we also have an imbalance right here. So we got multiple confluences right here. And you can see this reaction right here. Obviously, we break this. So that is where we're getting our entry. And you can either ride this up to these relative equal highs right up here for an easy, quick target, or just go for a base 1-to-1, which is what I recommend 9 times out of 10. That is going to be the most logical, and you're going to be the most consistent with that unless you have quite a bit of screen time. And I also want to, this is the one I sent in my Discord and said, I asked him, I was like, why would this be a bad setup, right? And a couple of people got it right, but ultimately, what is there not supporting? This is just a sweep. There's nothing else supporting this, right? We are more so in a higher level of premium, right? Obviously, we had a market structure shift on a higher time frame over here of a external high in the relative area. But what do you see right here? Like I just said, there's really nothing supporting it. We don't have a fractal. We haven't even tapped into this imbalance. And actually what we did was we created equal lows with that imbalance low right over there, right? And ultimately we know with a lack of confluences lining up that it's not going to be a high quality setup, which is directly why this setup failed. This is not high quality at all. I wouldn't even rate this a C setup. It's literally just it's just a sweep by itself. And as I had said, a sweep by itself is nothing more than just a pattern. There needs to be some sort of confluence and narrative behind it to be able to execute it with the proper framework, right? This next setup, it was okay. I wasn't a huge fan of it. It didn't even really jump out to me. Now, this is definitely it's an okay setup, like I just said. But right here, you can obviously see we have this low over here. We sweep it right there. We get a double purge right there. We also have this CSS over here, but we also have equal lows over here. But the thing is, obviously, how many confluences do we have lined up here? We have market structure, we have a sweep, and we have a CSS. Usually, my favorite trades will come off of CSSs or fractals where the sweeps line up with, right? And this is exactly what happens here. So we automatically have 3 here, right? So this would be a go. I personally did not trade this. Like I said, I just did not like it. It didn't jump out to me. It didn't speak to me. But this did run up close to profit target right up here for the 1-to-1. It went about 77%. Usually a good break-even protocol is about 80% of your profit target. So that's a good rule of thumb to follow. And then there was a setup right after. Now, usually with these larger range candles, I'm not a huge fan of them. Now, this one would have still worked. Usually I like stuff somewhere around or close to 15 points at a maximum because I do not want to be too over risk because I use a constant size of usually 1 mini and 15 points, 20 points on 1 mini copy traded across a lot of accounts. If you take a loss, it's going to be quite big. It can cause some issues if you're not keeping like a constant level of basically just sizing, because if you're trading one-on-ones, you don't want it to get too spread out to where you're getting a winner that's like 4 points if you're trading pre-market, and then you end up taking a loser that's 15 points down the drain, because realistically, if you keep getting some of those like 4-point one-on-ones, it's going to take quite a bit to climb out of that. So it's good to have a little bit in mind in regards to what your maximum risk is. I always preach being defensive. And saving your capital preservation is key, and it's going to keep you in this game for the long run. So that's directly why I did not, or was not a fan of that one. Overall, it still would have worked, but you would have got into some decent drawdown. It came about 4 points away from your stop right down there. Your stop would have been down there, and you would have been targeting one-on-one somewhere right up here, right? The next quality setup that I did like was right over here. Obviously, you can see we just had this big, basically middle finger in the market. Some of the Discord members were joking about this. It was pretty funny because this happened recently the other day, I believe. But it's just funny to see because we literally just go straight up, straight down. Just looks like a big middle finger. Right here's the left knuckle, and we almost formed the right knuckle. This could also be the shape of something else, but I'm not going to talk about that. But there was actually a good quality setup out of here, right? Obviously, you can see we have this break. We have a higher time frame break over here. This would be a bigger zone. This would be basically the SNDR of this break. The break or the zone responsible for that structural break right up there. We refer back up to it, start to accumulate a little bit. Then we come down and snipe this low right down here. And you can see we break above it where we would have got our entry right there. And this would have gave a nice one-to-one. Or if you understand, like I've talked about a couple times about these straight up, straight down moves, is there's a high likely chance that we're going to come up and mitigate deeper. In a smart target here, I actually took one of these. I actually took this trade and I sent it in the Discord, like a screenshot of it. I think a couple people actually took this, but there's two possible scenarios in regards to kind of exits here. Obviously, we have this 1 minute CSS up in a premium that's not really been mitigated yet, my opinion, because we did not get a clean close below it and the refer back to it. We got our close here and then just melted right back down. So that could have been a really good target from that standpoint. Or if you wanted to go for a little bit more conservative target, you could have targeted this previous basically swing high over here, which is smart because if you have these marked out on your charts, the algorithm will refer back to these points time after time after time. And if you ever find yourself in a situation where you're trying to seek a target and you don't want to get too greedy, usually previous swing highs and swing lows can be good targets, especially if they're prominent, like external highs and lows, right? So that was that setup. That was really, really clean. Also, always along with market structure right here, you can see we have some beautiful swings going up. And this is kind of a likely area to trip up. And I was looking back over it and I recognized a couple things I wanted to discuss directly correlating with this, right? Is you can see we have this high, these triple equal highs get swept right there, right? This high gets swept right there. That high gets swept right there. So realistically, if you're not looking for proper stuff, you could have got stopped out one time there, and then finally got that flush down. And if you're going for these lows, you would have been able to get a profit, which is a really nice trade, which I'll cover. But something I noticed about this, right? What do we know about mitigated and unmitigated areas, right? Unmitigated areas and mitigated areas, or actually I'll refer back. I'll say mitigated areas are likely to get liquidated and it's going to reach for a higher unmitigated area, right? And you can see we have this 1 minute CSS here. We have had a lot of accumulation within, which is a kind of a hand tip about already being mitigated, right? So recognizing that and understanding that there's a high likelihood it's going to want to mitigate to the next or refer to the next unmitigated area is definitely something to keep in mind, because in my eyes, the next unmitigated area would be this 50% of this wick, because you can see we come up, we touch it, but what do we not tap? The 50%. The 50% is still wide open, and if you look at this, it is exactly where we referred to once we took that final high. So if you have stuff like that in mind, you would have been able to avoid all of that mess right there. And ultimately, this trade is the one you would have caught on the quick scalp. You can see we would have got an entry off the break of that candle. And there's two scenarios. A lot of times, if you're in alignment right here, you can easily target external lows and external highs. But as I've said, if you just want to go for a base one-to-one, you can do that. So you would have been out rather quickly there. Smart targets for me would have been right here, or yeah, realistically right there and right there. The better target for me would have been right there, just because it's a internal low, and those are always going to be, to me, the low-hanging fruit targets and the high likely targets, right? The next following setup, you can see we engineer some liquidity. We start to accumulate above this low right over here. And what do we know about relative equal highs, equal lows, equal highs? Is price will form them, trade away from them, liquidate the highs that, or highs or lows that put them in, and then refer back, right? So you can see we put all these lows in, we come up, we sweep this high right up here. Small baby sweep, but it still counts, obviously. We refer and return back into the range, and we have a nice little up close fractal right there. Boomski. So we got market structure, we got that fractal, we got a sweep, so we got 3 right there. So it's a green light for us. And you can see you would have been tagged in right off the break of that candle, and ultimately it would have flushed down, taking out that low and hitting your profit target for that quick scalp. The next quality trade for me would have been right over here. This is actually extremely clean. We refer back up to this area, refer back to this up close, all of this consolidation over here, and we know price is attracted to consolidation. And that's directly what happens here. We come up, we refer back up, we liquidate that high, we get basically equal highs put in here, liquidate that, close back within the range yet again. And you can see that would have gave a 1-to-1 and basically instantly. That would have been a little bit of a smaller profit target. So if you're wanting to reach for a little bit more, that is perfectly fine. But do keep in mind that if you're not basically in tune with the market, you could run into some problems. That is, again, why I always say 1-to-1s are going to be your friend. You can make an absolute killing in these markets trading 1-to-1s, especially if you're trading prop firm accounts, right? So that would have been the next quality trade. And then we're already kind of creeping into lunch, usually around 11:15, 11-ish. I start to step off the gas directly because we do get quite a bit of accumulation within. And you can see that's directly what happened here. You can see right at 11, right? 11 till about 12:30 is just a tighter range, right? And usually if you're good at range trading, go ahead by all means. But for most people, they can get caught up in these, especially if they're reading the markets not properly. It can cause them more trouble than benefit. So with that in mind, I do want to cover this big R trade right over here. This is that 10R that I had executed on the 10-second chart. I'm going to bump up to the 12-minute really fast and show you basically the framework here. So first confluence, right? We got market structure. Obviously, we're ripping. And actually, I do want to cover why I was targeting 43325.25 today. Okay. If we zoom out over here, right? Our original basically flip, right, is right here, right? We have this close below, boom, and we have this close above. So this is my manipulation leg that I am framing my standard deviation projections off on the higher time frame charts to get basically almost a DOL or more so a narrative, right? So that is what all of these are framed off of. And if you zoom in right here, 18433.25 is the -2 standard deviation. And the reason that was a good target for me is if you are familiar with standard deviations, you know what I'm talking about. I'm not here to reteach standard deviations. There are already a lot of quality videos on them. But if you know about closes above, below certain standard deviations, you know the normal protocol, right? We get a close above the -1, -1.5 area. So we know with high likelihood we're going to go to where? The -2, -2.5. So coming into today, and especially seeing the 72-minute with that news-driven event that we came down here and took all of these lows and referred back into this for basically a double tap, I was extremely, extremely bullish for today. And I knew with high likelihood that we're going to just continue to the upside and take out quite a few highs and lows. And basically, let me zoom back in. My first two main targets were this high, and my terminus for the day was at 18,433.25. So that is what this is based upon. Because I did have a couple questions. Sorry for jumping around. I had a couple questions about how I knew, or I wouldn't say knew. I just had a narrative and a point of interest where price was likely to go. Obviously, I can't predict the markets, but I can place myself in a point to be within and know where price is likely to draw to, right? So getting back into the setup directly, obviously you can see, let me delete this real quick. We have this wick. We have this wick right there. That is a nice little fractal. Boomski, right? Okay. We refer back into there. Now let me bump back down to the 1 minute. So that's one confluence. That's two. We got market structure. We got our fractal, our higher time frame fractal. That is something I always require for these higher trades because I always preach, if you don't have a narrative behind you, You even need a narrative with 1 minute scalps, if I'm being honest. But more so with these higher R trades, because that's only going to be achievable when you are on the right side of the marketplace and have aligned yourself properly with the market, right? So we got market structure, we got a 12-minute fractal, right? Now, once we've identified that 12-minute fractal, I am immediately looking for POIs within or near that higher time frame fractal. And the really obvious one here is this 1 minute imbalance. Let me drag this right over here. You can see we have this beautiful 1 minute imbalance. We refer back to it, and what do we see within? Now, I wasn't requiring a 1 minute sweep here because we already had a lot of confluences lined up. I didn't want to get too picky because I know there's going to be some times where I will miss an entry directly with being so, which is not a problem. But it's definitely good to recognize what scenario you're in, because also today, especially on this move up, what we were getting really shallow mitigations. We were barely referring back into those areas. And that's something really important to recognize to be able to gauge high likely areas. If it's going to be higher, if it's going to be lower, if we're going to get a deeper mitigation, should you be anticipating it? And then that directly comes down to screen time and watching days, higher expansion days, and just how they react off certain points, right? So with that in mind, obviously you can see we refer back into this 1 minute imbalance. That is almost enough for me to frame a trade-off. What do we see down here? We sweep this low right here, close back within the range. We get a nice body closure above this last down bar right here. I take my entry off of the body of this CSS, which is something I have noticed recently, is you can frame a entry more so off the body of CSS candles. It's going to give you a little bit better RR because I was able to play with a really ridiculously tight stop on this specific trade. I think it was 2 points, targeting up towards these highs, but that's just something to note. I'm not saying you need to do that. I want you to go back test that and see if it works and you like it. If not, just keep doing those 10-second CSSs if you are taking these higher R trades. Now, something I also always talk about is allow for price to give 100% mitigation. If you don't, you're going to run into probably more problems than not, right? 100% mitigation is basically forming equal highs and equal lows. If you took this trade, right, and you got in at that body and you had your stop here, right, you would have been stopped to the exact tick, right? I always, on these specific trades, I allot 2 to 3 ticks below that low to frame or place my stop, right? Because I know there is a chance that price can fully mitigate that area. It can come down and make equal lows or equal highs and push off of that. And I don't want to be in a position where I get taken out because I was too, not greedy, but too tight of a stop to where it's directly at the lows and highs, because like I said, there is always that chance of 100% mitigation for price to put equal lows, equal highs in. And actually, I had my stop a little bit below. And when we made this equal low right here, when price started to push back above this, I added to my position. And this immediately told me that price was going to gravitate towards these highs, because if you know the function of equal highs and equal lows, they will form and they will run the high or the low that put them in. In this case, this was the higher time frame high. You can see we put these in on the 1 minute as well. This is the high over here that puts in these equal lows. So this is a high likely target. And I'm not going to be basically a big sissy and not hold until them, because I've seen this more times than not, to where this consistently happens over and over and over. And honestly, while people would probably be scared of price referring back to their basically entry right over here and coming close to their stop couple ticks, this was the strongest confirmation for me, because once I saw this specific signature happen, I was like, okay, game on. This is going to be easy. This is going to be an easy target up here, which is ultimately where I targeted. You can see we did chop around a little bit. We refer back up to this 1 minute CSS right up here. And you can see we got a little push off of that, came back, mitigated this swing over here, and ultimately pushed off of that. There would have been a great add down here. Once we got or closed above this, you can see we tapped back into that imbalance, which ultimately took us up to this high right up here. And I think that is it. That's everything I want to cover for this video. I think I covered quite a bit and gave a few key points. Those being, you need confluences with the sweeps and just tightening down some of these higher R trades a little bit more. And hopefully y'all understand these. As usual, if you have questions, feel free to either comment down below or just reach out to me on Twitter, or join the Discord, the free Discord. I'll have it linked below. I'm always active in there. There's, like I said, a lot of really good people in there that are willing to help and answer questions that you may have if I'm not available. So yeah, I believe that is all, and I will catch y'all in the next video. Peace.